Hi friends, welcome to my channel Develop Finance Skills. So today we will be discussing on investing in small cap mutual funds. Small cap mutual funds are different than the large cap funds and the mid cap funds. We will be discussing thoroughly how to invest in the small cap mutual fund and what is small cap mutual fund altogether. So let's start with the video and please follow it through the video until the end. So or below. Now large cap companies, so we need to focus on what are large cap. Let's understand what the large cap companies are. Large cap companies have ranking 1 to 100. Okay, so the ranking of first 100 companies are termed as large cap companies. So companies which are from 101 to 250 are known as mid cap companies. Okay, so the first are the large cap companies and the second are the mid cap companies, and the last which have ranking in the stock exchange from 251 to below 251 means onwards, these are called as small cap companies. Okay, so now we understand what are small cap companies are. So these large cap companies consists of above 20,000 crore market cap. Okay, 20,000 crores market cap. Mid cap companies have market cap of 5,000, from 5,000 to 20,000 crores, and the small cap companies are until 5,000 crores. Small cap mutual funds are those mutual funds which invests around 65% of the total fund value to the small cap equities. Okay, so it is 65%. So 65% of the total amount we need to invest in the small cap equities. Those are termed as small cap mutual funds. Okay, so small cap mutual funds are very volatile in nature, and the price of the small cap mutual funds fluctuates more, but it has a high returns and high risk. Okay, so we need to invest small cap always in a SIP mode so that it averages out the risk factor. Okay, so the return is higher in case of small cap in the long term. We know that the large cap funds are like elephants, and elephant cannot dance, as the statement goes. So large cap funds consist of a very big market cap and their share prices are quite stable, and there is growth potential in large cap mutual funds as well, or large cap companies as well. However, those companies have a decent growth and not excessive growth that we expect or that we get from the small cap companies. So the small cap mutual funds which invest in the small cap companies gives a higher return. We can average out the risk by investing in the SIP mode. Okay, so let's check with some of the small cap mutual funds as well. Nippon Mutual Fund. Nippon small cap. In Nippon small cap mutual fund, we can see that this has a higher growth. Okay, it has a CAGR of around 58.27. Okay, the first year. Second year it has a CAGR of 48.73%. The 5 years you can see that it has a CAGR of 36.95%. Okay, the AUM or the fund value is 56,468. So this amount has been invested in the small cap companies. So as a rule goes that 65%, minimum of 65% of this amount has been invested in the small cap, and it has an expense ratio of 0.64%, so it is a decent one. So yeah, you can see how the growth trajectory is. So as we go down, so we can observe the allocations in the industrial, materials, consumer discretionary, financials, consumer staples. See, they have investment in the HDFC Bank and even in the small cap, that APAR Industries. I haven't heard that. Tejas Networks, Bharat Heavy Articles, I have heard. Dixon Technologies, not heard. So Axis small cap. So there is Axis small cap fund. See, the trajectory is quite the same. It has a high growth return. So CAGR, it has a CAGR of 40.25 in the first year. In the second year is 35.15. In the fourth year it is 39.43. So it is above 30s. Okay, 30. It around 30 to 50. So quite impressive CAGR. Okay, and it has a AUM or the fund value is 22,262. Okay, so we have other small cap funds like DSP, small cap funds. It has a NAV of around 208 and a CAGR of 44. Here also the trajectory you can see that it is quite impressive. First year, second year, fourth year, and in the fifth year it has around 30.37. So it hovers around small cap mutual funds returns. When you invest in the small cap mutual funds for a period of 5 years, it has an impressive return rate which rounds around 30%, 30 to 40% return, overall return. So when we invest in the small cap, in the long term it beats the large cap or the index funds as well. So we need to be very focused, or we need to think long term when we invest in the small cap mutual fund. Okay, so at least it should be in our 5-year horizon. So that much we need to think of before we invest in the small cap mutual fund. So the trajectory you can see is the same for DSP small cap mutual fund, and we have HDFC small cap, see HDFC small cap mutual fund, it has a CAGR of 43.02 for the first year, second year it is 43.46, fourth year it is 44.58, and 5 years 28. So it hovers around 30 to 40% return. Okay, so it is quite impressive as well. So now if we compare with the large cap funds, let's see. The blue chip funds, large cap companies are also often called blue chip, so it is their blue chip fund. ICICI Prudential blue chip funds, see its CAGR, it is a large cap fund, but it for 1 year it is giving 40.71%, so it is quite impressive. Second year it is 42, for the long term, see it falls below 25, so it is around 21. I am not as a disclaimer, I am not comparing the mutual funds individually. I am just trying to show that in comparison of the large cap mutual funds, the small cap mutual funds provides greater returns over the 10 years. So in the long term, short term, small cap mutual funds are very much profitable. We do have a risk associated with it, but if we judge it and if we calculate the risks and if we invest for a long term, it will give us higher returns. So I have invested in the small cap companies and it has yielded much more returns than the large cap and the mid cap. So it is my personal experience as well. So see allocations. So I would recommend that if we invest in the small cap stocks, okay, in the small cap stocks if we invest, so that needs thorough research and we need to see every aspect of the balance sheet, PE ratio, dividend yield, and then only after being confident that we are pretty much sure that this small cap company stock is going to improve, we can invest. But that part can be taken care of by an active fund manager who is always who are very proficient in picking up the small caps. So I would recommend buying small cap mutual funds instead of the small cap stocks as a takeaway. Thank you for the watching this video.